Welcome back, accounting boffins. Right, examination questions. What are we looking at this time? Something in paper 2. But before we go there, a quick recap. Remember that within paper 2, you're also going to get questions on ethics, right? Remember with regards to internal control, you also get international financial reporting standards. All of that would fit into internal auditing and control. Right, so with regards to the question, we are told here, you are provided with information relating to STUT Limited. The financial year end of the business ended on the 31st of July 2020. Okay, question says, provide 1 point why it is a good idea to compare actual figures against budgeted figures. Now remember, we're dealing with a question on budgets, which falls within the ambit of paper 2. The question says, why must you compare actual figures with the budgeted figures? Here goes. 1, to reflect on whether your projected receipts and payments have been realistic or well controlled. What did we say about the budget? We said the budget is a projection. Remember, it's a forecasting tool. So you have to compare your actual with your budgeted to see whether or not it was well controlled, whether it was realistic, etc. To improve future projections. Yes, to take into consideration. Yes, this time we didn't do too well with these projections because of these factors. So now let's take them into consideration when we budget, when we draw up the next budget. To determine variances, very, very, very important. To determine variances between projections and actual amounts, to be able to control the receipts and payments on a monthly basis. So what do we mean by a variance? A difference between actual and budgeted. You get a positive variance and you get a negative variance. Obviously, depending on the situation, it doesn't always necessarily mean that a positive variance is a good variance. You'll see when we actually do a few examples based on variances. Okay, identify 2 items that were incorrectly placed in the cash budget. Let's look at items here. Salaries and wages, perfect. Vehicles bought on credit. Clearly you can see credit transactions do not feature in my cash budget. Why? A cash budget, you think cash. You think receipts and payments. Clear? So, if you bought vehicles on credit, it will not appear in your cash budget. The next one, payments to creditors, yes. Cash purchase of stock, yes. Depreciation. What can you tell me about depreciation? Remember, we've discussed depreciation at length in many of our other lessons. Let's define depreciation, right? We know 1, it is an imputed expense, meaning it's a book entry. And number 2, we know it is a non-cash item, meaning it does not impact on the flow of cash. Therefore, depreciation will not appear in my cash budget. Depreciation will appear in my projected income statement. Clear, guys? So depreciation is a non-cash item like bad debts. It will not feature in my cash budget. So we've identified payments to creditors as 1 and depreciation is the next one. Advertising, yes. If it was paid for, it would appear in my cash budget. Okay, so I've identified the 2 items that were incorrectly placed in my cash budget. The question says, your June salary was 135,000, your July salary was 151,200, right? The question says here, calculate the percentage increase in salaries and wages. Okay, what are we going to do? Step number 1, take your new salary or the July salary to be 151,200. So let's take that. 151,200 minus June salary, which was 135,000, to give you, right, a figure of 16,200. Okay, so what have you did? You've ascertained, or you've calculated, that the increase in the salary in terms of rands was 16,200. Got it? Okay, now take the 16,200. Watch, there we go. 16,200 over what was my base. The previous month's salary was 135,000, so over 135,000, here we go. There's the previous month's salary. The increase was 16,200 over the previous month's salary times 100 over 1, because we want to express as a percentage. Let's do that. We take 16,200 times 100 divided by 135,000, and voila, you get an answer of 12%. That means there was a percentage increase of salaries of 12%. Just on this one year, although the question doesn't ask for it, you could be given the percentage increase and be asked to calculate the amount as well. So keep that in mind. Okay, next question. At the end of July 2020, you identified the following when comparing budgeted against the actual. Remember what we said? What we alluded to earlier in the lesson? We said actual and projected variance. Here goes. Your audit fee, you budgeted 75,000, but your actual was 175,000. Advertising, you budgeted 30,000, your actual was 0. Right. Clearly you can see this one here, audit fees, is a negative variance. A negative variance, meaning your actual was more than your budgeted. Your advertising, on the other hand, was a positive variance because you budgeted 30,000, but you spent 0. Okay, now let's discuss each item. Explain in each case what the effect will be. So, firstly, if you're looking at this one here, it says here, it's actually, our problem should be, our budget should be the audit fee here. Let's just correct this here. Right? So one, we under budgeted or we overspent. It could mean poor internal auditing resulting in a longer and expensive external audit process. Remember what we're saying here, guys, that the internal process is done within the company, and obviously the external process is done outside the company by an auditing firm. Okay? Advice, we could change our auditors. Audited twice will eliminate fraud and assure the shareholders or the partners or the owner that the investment is protected against any fraudulent activities, improve the internal audit. We need to appoint an internal auditor who would set up efficient internal control processes that meet standards of external auditors. Okay, so although we're now talking about internal audits and external audits, which obviously applies more to grade 12 work, but as a grade 11 accounting student, you also need to know that an internal auditor is appointed internally by the firm who works for the business, whereas an external auditor is appointed outside the firm and he reports to the shareholders when you're dealing with companies. So we just thought a bit of extra, although you don't have to know about companies, but it's good to know. It increases your knowledge on the subject as well. Right. Again, the problem with advertising, we budgeted 30,000 Rand and we haven't used it. That means we underspent the budget, or it's a positive variance. Does that mean it's good? Not necessarily. Look at the reason why. Consider the implications of not advertising. It is important to advertise in order to attract customers and possibly improve sales. Definitely, right? I remember somebody telling us one day in one of our discussions that if you do not advertise, It's like winking at a girl in the dark. She can't see you. So obviously, if you do not advertise your wares, you're definitely not going to attract your customers. And it's going to have a direct impact on your sales figure, right? So what do we have to do? Use the budget more effectively to improve the sales, or adjust the budget if found to be ineffective. Yes, certainly use what you have budgeted for. So if you've budgeted 30,000 Rand for advertising, revisit the budget and see, okay, 30,000 may be too much, reduce it. But you can't reduce it to zero, because definitely you need to advertise in order to attract customers and consumers to your business. Yes, 30,000 may be too much. Reduce the budget to 50% of it, which would be 15,000 Rand, but whatever you budget for must be used in your budget period. Okay guys, in conclusion, you've seen in today's lesson where we've given you a variety of questions to give you a flavor of what could be in your exam paper, right? So make sure before you prepare for your accounting paper 1, know exactly which topics will be examined so you prepare accordingly. Notice what appears in paper 2, prepare accordingly, right? In conclusion, do as many past papers as you can, because the more you practice, the better will be your preparation for an exam. And yes, when you walk into an exam, remember you must have BMT. What do we mean by BMT? Big Match Temperament. And how do you build your BMT? By practicing on your past papers, activities, and working in such a way that you are adequately prepared for the exams. What are we going to say? You're going to aim for the moon. And perchance, if you don't get there, you're definitely going to be Ashraf's shining star. Until the next time, be good.